Tesla stock has been on a dramatic downward spiral since December 2024, plummeting over 50% and wiping out more than 700 billion in market capitalization. The company is facing the most challenging period in years with 8 consecutive weeks of losses in the stock market. Several factors have contributed to this decline, of course. There's a recall of over 46,000 Cybertrucks affecting almost every Cybertruck on the road. There's a record number of Tesla EVs being traded in, according to recent Edmunds data. There's declining sales expectations, with Q1 2025 vehicle deliveries projected to be at their lowest level in 3 years. There's increasing competition from Chinese manufacturers like BYD offering more affordable and technologically advanced models. There's also Elon Musk's political activities, particularly his association with President Donald Trump, alienating a significant portion of Tesla's customer base. This is a channel of technical analysis. So in this video, we will see if Tesla is following the same exact chart pattern that predicted its 65% crash in 2022, and could we even see a bigger drop this time? We'll see why are institutional investors silently dumping Tesla shares while retail investors are being told to buy the dip. And finally, we'll see what is my opinion on where the price of Tesla stock is going to go. Everything I will talk about is summarized on the Profit Punch website. So if you want the complete system that finds winners like Nvidia, which did 200%, Appfolio 350%, SMCI 250%, using just 1 hour of your time every week, you can find the full guide linked in the description below. So I have the weekly chart on this side, and the weekly chart I have the 10-week and the 30-week simple moving averages to get the longer term view of what is going on. And then I do have a daily chart here with a 20-day exponential moving average and the 50-day simple moving average. So on a daily chart, we can see the 50% drop. It's almost 60% now. And then we also have the earnings table to see how the Tesla earnings are doing and the return on equity. So let's get the earnings out of the way. So Tesla is called a growth company, but we cannot see any growth. We like to see earnings growth of over 40% over the last 4 quarters, but here we are seeing decelerating earnings growth, and growth companies which normally fail to deliver growth numbers crash very, very badly. And that is what we are seeing in Tesla. The return on equity is also not great. We like to see return on equity that is above 17. We are only seeing 10. So let's get the earnings out of the way. The earnings are not looking good. The future projections are not looking good. The only thing that's keeping the price of Tesla up is the belief in full self-driving robotaxis and those Tesla robots. So let us focus on the weekly chart, because that is what is going to be giving us a lot of our information. The first thing that you must see is that the red wicks have a lot of the volume. So you see the volume on the red wicks is the highest volume, and then the green wicks did not have as much volume as these red wicks. So that means that more people are selling than are buying. And this causes the stock price to drop so heavily. Another very scary sign that I see is that the 10-week simple moving average is coming to cross under the 30-week simple moving average. And this is normally a very bearish sign. Let's go back and see how this signal reacted in the past. Let's start out here. So you see this crossover here. In February of 2019, we did have a 45% drop, which is very significant. And then here, this just from the crossover to the bottom, here we got a 20% drop. Not so bad. And here we can see a 30% drop, which doesn't seem bad. But if you check out the bigger part of the drop, it seems like it was more like a 65% drop. When we go into 2023, we see a drop that's at least 40%. That is from the point at which the stock crosses over. And we can predict that the crossover might happen around $319. So what is going to happen is that I think that from there, if we see a 60% drop, let us not be surprised if Tesla drops to $100. Now that is the 10-week, 30-week crossover bearish signal that I'm not liking. And normally what happens after we get a crossover? So if we look back, when it crosses over, the stock will return up like it, and it looks like it's going to do something, and then it will just continue to crash. So here, while it was crossing over, this one did not return back up. It just did a very small return and continued to crash. Here we see it falling, it returns, and then it crashes. So what we're expecting here is that Tesla stock is crashing, and then the bears, or the people who shorted, they want to make their profits. And what happens when a person who is shorting wants to make their profit? They have to buy back shares, and then it's going to push the stock price up a little bit, and people might think Tesla is recovering, and then it's going to just continue crashing. So what I'm expecting is for the stock to go up just a little bit. I'm expecting Tesla to go up a little bit, and then after that, I'm expecting it to come back and continue crashing. Now, the final signal that I think is very bearish is that this is looking like something in Elliott wave analysis called an expanded flat. Now, an expanded flat is normally, we have a wave A, which comes down, then we have a wave B, which goes above the high of wave A, and then wave C will normally just slightly go below wave A. So I'm expecting that if this is actually what an expanded flat is, because we're not always sure. While it's developing, you can never be really sure of what it is, but I'm saying that it looks like. And if that is to be the case, I think the price of Tesla is going to come to 100. It looks crazy right now, but it is very possible. The last bearish sign that I'm seeing is that we all know that stocks never fall in a straight line. If a stock just falls in a straight line, that means that it is going to recover a little bit and then continue. Stocks don't just fall down in a straight line. A crash can never be a straight line down. It has to recover a little bit and continue crashing. So I highly suspect that we can expect the price of Tesla to rebound a little bit and then continue crashing. So if you're not in the stock, please don't buy. You might get a shorting opportunity once it comes and tests the moving averages. That is one signal that might happen. If you're in the stock, you can start offloading your shares. You can offload some now, and then if it starts to recover a little bit, continue offloading your shares, and then make sure that it doesn't catch you if it comes back down. I hope you found value in this video. May the markets be with you.